All right, so comic book fans know the story of how exposure to gamma rays turned Bruce Banner into the Incredible Hulk. Well, a few know about gamma squeezes and their role in the stock market. A gamma squeeze, what is that? Well, it's the feedback loop, which rising call option activity prompts market makers to buy the underlying shares because they've got to maintain what they call a delta neutral position. My next guest is among the most astute market watchers that I know. He says the next gamma squeezes are being positioned right now. Let's bring in Manward Press, their chief investment strategist, Shah Gilani. Shah, before I get to all of that, you know, and then last year you've given us some grand slams, Intel, Microsoft, Micron, and Nokia, and some of these others. Are you? I know you like to take profits. Have you cashed in all of those?
I'm out of most of those positions, Charles. I would say happily, except the price has gone higher since I've gotten out. But I had some pretty significant gains. But it's always that way. You look back and say, gosh, I should have held on a little bit longer. But I'm seeing a fear of missing out movement here. I'm seeing the gamma squeeze, is occurring here, causing dealers to have to chase these stocks higher because they've sold so many call options as investors have chased all of these big names higher and higher. So that's getting a little frothy for my taste. And so I would say I'm not disappointed that I'm out, but right now it's 50-50 on whether this rally can continue in my book.
Yeah, my man, I closed one out earlier and late last week. If I just had held 2 more days, I'd be hanging out in the Hamptons with you. All right, let's talk about the next opportunities instead of crying in our milk. You're looking at this SaaS apocalypse thing. That's, what are you seeing in there that could be ready to make a move?
Well, I'm looking at all the familiar names that have gotten beaten up pretty hard, Charles. I'm not ready to buy yet, but I'm seeing some accumulation at lower levels with the likes of Workday, ServiceNow, DocuSign, Adobe. These are names that have gotten so beaten up that I think if we see a turn in those and they have a breakout, I think investors will glom onto those pretty quickly because they look like value stocks right now. They're not there yet. They're starting to make a turn, but at least they've started to consolidate and at significantly lower levels from when they've been a year ago.
Right.
So I think there's going to be some opportunity there, but we're not there yet.
Yeah, speaking of software, Microsoft has gotten caught up in this move as well, which is kind of interesting. I mean, talking a hyperscaler, a ginormous name that has a lot of other business interests, and almost every single day, at least one guest comes on the show and says, you got to buy it. Where are you with that?
I bought some back when it dipped down to 369, added to my position there, and happy to do that. The stock has gotten beaten up a little bit on the fact that, number one, there's the question of how much CapEx are they doing and what's the return going to be on that CapEx. I think it'll be absolutely perfect for Microsoft down the road. But the question right now is, it's also a software company, and right. How many of their software products are going to be interrupted and I think maybe overturned by AI? That's the question investors have. In my book, none of them. I think they're all going to be augmented by AI coming from Microsoft itself. So I think the product line is fantastic, is looking healthier and healthier, and I think investors will finally realize that Microsoft is a much owned stock that has to be owned because, not unlike Google, it's just going to catch fire. And I think we're probably maybe a quarter or two away from that.
2 stocks I want to hit at least before I let you go in a couple, with just 2 minutes ago. Robinhood was killing it last year. It was just unstoppable. Then it stumbled big time. It's starting to turn higher. I noticed that sometimes it feels like its fortunes are tied to Bitcoin, but it's a much bigger, but the company does much more than that, right?
Yeah, it's got a huge volume, and I think as far as the profitability, we're talking about 40% profit margin there, Charles. And yes, it got beaten up a little bit on earnings because their crypto trading, their volumes were down considerably last year, and last quarter they were also down. So I think that is going to turn around. Crypto is in a bit of a winter, and I think the long-term future for crypto is going to be tremendous, and I think Robinhood is going to be the primary beneficiary of that. So yeah, I bought it a little lower. I like it here, and I think it's got a long way to go.
30 seconds. Hims has this sort of cult-like following. The stock got hammered, annihilated. They cut a deal with the big drug company they were at odds with. It shows signs of life, but every now and then it just gets smacked down. What do you think ultimately propels it higher?
I think long term, it's a great company to own. The profit margins got tremendous revenue for a company its size. It's just got to find a sweet spot, and it's gone in and out of different areas, especially with the weight loss drugs. But they have a lot of other offerings, and I think they do a great job of marketing their product line across the internet. And I think they are going to be in the future a go-to company for everything from weight loss drugs to ED meds to pretty much anything that investors and people who are concerned about their health are going to be able to buy online. I think HIMS is going to be the spot.
Yeah, you know, it's on my watch list, man. It's one of these names. I agree with you. One day it's going to catch fire. It's going to get one of those gamma squeezes one day. Shaw,
Yes,
I miss
it
you,
is.
my man. Talk to you again soon.
Great talking with you. Thank you,
too.
Charles.
All right.